Let me ask you something very personal right now. You came to America, you worked hard, you paid your rent, you paid your bills, you maybe even started a small business, and now you are thinking about applying for citizenship, or maybe you are already on that journey toward your green card becoming permanent. You have done everything right, or at least you thought you did. But what if I told you that a bank account you have back home in your own country, one you barely think about, one that maybe has your mother's savings or your old pension funds sitting in it? What if that account is quietly building a case against you right now? What if the IRS already knows about it and they have not told you yet? This is not a conspiracy theory. This is American law in 2026. And by the end of this video, you are going to understand exactly what is happening, exactly what the $10,000 alert means for immigrants like you, and exactly what steps you need to take before it is too late. Stay with me. This is the most important financial video you will watch this year. Okay, so let us start with the basics, because this is a beginner finance channel, and I never want to assume you already know this stuff. When people say the IRS $10,000 rule, most people think it is one single rule. It is not. There are actually three completely different $10,000 rules in America, and each one works differently, hits differently, and can hurt you in a completely different way. The tragedy is that most immigrants only find out about one of them, if they find out about any at all. So let me walk you through all three, starting from the most visible one and moving toward the one that is silently hurting citizenship applications right now. The first rule is the one you have probably heard about before. It is the bank cash deposit rule. Under a law called the Bank Secrecy Act, whenever you deposit more than $10,000 in cash at your U.S. bank, whether that is in one go or across multiple transactions in a single day that add up to $10,000 or more, your bank is legally required to file something called a currency transaction report. People call it a CTR. Now, the CTR itself is not the problem. Banks file thousands of these every single day for completely normal, hardworking people. It is automatic. It is routine. The report goes to a government agency called FinCEN, which stands for the Financial Crimes Enforcement Network, and in most cases, nothing happens after that. But here is where immigrants specifically need to pay attention. The IRS can look at these reports, and if the cash you are depositing does not match the income you reported on your tax return, that mismatch raises a red flag. So imagine you told the IRS you earned $28,000 last year, but your bank shows $50,000 going in as cash deposits. The IRS is going to have questions, and if you are in the middle of a green card application or approaching your citizenship interview, having the IRS ask questions about your finances at that exact moment is the last thing you want. Now, here's the part of this first rule that gets people into serious trouble, and I want you to really absorb what I am about to say. Some people hear about the $10,000 reporting requirement and they think they can be clever about it. They think, I will just split my money into smaller amounts. I will deposit $4,000 on Monday, $4,000 on Wednesday, and $4,000 on Friday. That way I stay under the limit and nobody files any reports. I completely understand why this feels like a logical solution. You are not trying to do anything wrong. The money is clean. It is yours. You just do not want the paperwork or the attention. But what you would be doing has a name. It is called structuring. And structuring is a federal crime in the United States. Even when every single dollar you are depositing is 100% legitimate. Even when you paid taxes on it. Even when you earned it honestly. The act of deliberately breaking up deposits to avoid the reporting threshold is itself illegal, regardless of where the money came from. And your bank does not need to warn you before they act. They can quietly file what is called a suspicious activity report, freeze your account, and refer your situation to law enforcement, all without telling you anything. You could find out your account is frozen when you try to pay your rent. So please, if you have a large amount of cash, whether it is savings you brought from your home country, a gift from your family, money from selling property abroad, or anything else that is completely clean, deposit it all at once. Keep your records. Keep your tax returns from the years you earned or received that money. Transparency is always safer than strategy when it comes to the American banking system. Now let us move to the second $10,000 rule. And this is the one I really want you to focus on, because this is the one that is right now, in 2026, silently appearing in citizenship denial letters across America. This rule is called the FBAR, 4 letters, Foreign Bank Account Report. And I want you to say those letters out loud right now if you have never heard them before. Because from this moment forward, these 4 letters are going to be some of the most important letters in your financial life as an immigrant in America. Here is what the FBAR rule says in simple language. From the moment you became a U.S. tax resident, meaning from the moment you got your green card, or from the moment your H-1B or other visa status made you a resident under U.S. tax law, You have been legally required to report any bank accounts or financial accounts you hold outside the United States. And the reporting is triggered not when any single account reaches $10,000, but when all of your foreign accounts added together reach $10,000 at any single point during the year, even for one day, even for 1 hour technically. If your combined foreign account balances crossed that $10,000 threshold at any moment during the year, you had a legal obligation to file this FBAR report. Let me give you a real example so this really lands. Imagine Priya. She came to the United States on an H-1B visa from India 5 years ago. She has a savings account back in India with about $6,000 in it. Her family set up a small mutual fund for her years ago. That has about $5,500. Neither account by itself seems like a big deal. But $6,000 plus $5,500 equals $11,500. That is above the $10,000 threshold. Priya was required to file an FBAR every single year those accounts stayed above $10,000 combined. She never knew this rule existed. Her employer never told her. Her accountant, who only handles basic U.S. income taxes, never mentioned it. And now she is about to submit her Form N-400, her application for U.S. citizenship. And that missed FBAR is sitting there waiting to be discovered. This is not a rare story. This is happening to immigrants from India, Pakistan, Nigeria, the Philippines, China, Mexico, Brazil, and every other country with a large immigrant community in America. People who have done nothing wrong except not know about a filing requirement that the government never adequately explained to them when they arrived. And the penalties are severe. A missed FBAR filing for a non-willful violation, meaning you genuinely did not know, can result in a penalty of $10,000 per account per year. So if you missed 3 years and you had 2 accounts, that could be $60,000 in penalties, even though you never owed any additional tax. For willful violations, the penalties are far higher and can include criminal prosecution. But here is the part that connects the FBAR directly to your citizenship dreams. In August 2025, USCIS, the agency that decides your green card and your citizenship, issued an official policy memorandum. The reference number is PM 602-0188. This policy fundamentally changed how citizenship officers evaluate your application. For years, the good moral character standard was mainly about whether you had a criminal record, whether you had lied on government forms, things like that. Character in a traditional sense. But this new 2025 policy expanded that definition significantly. Now, tax compliance, meaning whether you filed your tax returns, whether you accurately reported your worldwide income, whether you filed your FBAR reports, is formally part of the good moral character review. And from April 1st, 2026, this became even more firmly embedded into the process. USCIS officers reviewing Form N-400 citizenship applications and Form I-485 adjustment of status applications are now formally required to consider your tax history as part of their overall assessment of your character and your intentions as a permanent resident. They can and do request your IRS tax transcripts, not copies of your returns that you provide yourself, but official transcripts that come directly from the IRS database and cannot be altered or selectively presented. If those transcripts show missing years, if they show inconsistent income, if they show that FBAR reports that should have been filed were never filed, that information now directly feeds into whether your application for citizenship is approved or denied. There is another dimension to this that I need to tell you about, because it is something that has been in the news, and it is important you understand what is actually happening. In April 2025, the IRS and IC, Immigration and Customs Enforcement, signed a data sharing agreement. This was significant because for decades, the IRS operated under strict confidentiality rules. Your tax information was between you and the IRS. But this agreement changed that in certain specific circumstances. The agreement allows ICE to access certain IRS information for people who have final deportation orders or who are under active criminal investigation. Now, courts intervened. In February 2026, a federal court found that the IRS had improperly shared confidential tax information involving tens of thousands of individuals. Courts in Washington, D.C. and Massachusetts blocked the government from using that improperly obtained information. So there are legal protections in place, and this is still being fought in courts. But here's the bigger lesson. The wall between your tax world and your immigration world has become much thinner than it used to be. USCIS has always had the ability to request your tax transcripts when you voluntarily apply for benefits like green cards and citizenship. You hand that information over yourself as part of the application. And now, officers are trained to look at that information much more carefully than they ever were before. There is also something that happened in December 2025 that I think is very important for your awareness. The federal government issued guidance calling for the review of 100 to 200 denaturalization cases every single month. These are cases involving people who have already become U.S. citizens and whose citizenship is now being re-examined because of concerns about financial misrepresentation during the application process. Tax evasion and inaccurate financial reporting were specifically named as grounds for these reviews. So this is not just about future applicants. This is about people who thought they were done, who already had their citizenship ceremony, who already got their blue passport, and who are now being called back to account. Now I want to share with you some hidden rules that most immigrants never find out about until it is too late, because nobody explains them and they are buried in the fine print of U.S. tax law. The first hidden rule is what I call the aggregate trap. When I explained the FBAR rule earlier, I told you it is triggered when your combined foreign accounts hit $10,000. But here's what people miss. It is not just obvious bank accounts. The FBAR covers checking accounts, savings accounts, brokerage accounts, certain pension funds, mutual funds, and even some insurance policies with a cash value. If you have a mix of different financial products across different countries, and their combined value ever crossed $10,000 during the year, even briefly, you had to file. Many people think about their main savings account and stop there. They forget about the small investment their parents set up for them. They forget about a pension from a previous employer in their home country. Those all count. The second hidden rule will genuinely surprise many of you. Your FBAR is completely separate from your U.S. tax return. They are two different filings going to two different parts of the government. The FBAR goes to FinCEN. Your tax return goes to the IRS. Filing your Form 1040 correctly and on time does absolutely nothing to satisfy your FBAR requirement. And here's where the penalty becomes so dangerous. People think that because they filed their taxes properly, they are fully compliant. They are not. The FBAR is a completely separate obligation, and missing it has completely separate penalties. The third hidden rule is brand new and started on January the 1st, 2026. If you send money from the United States to another country, whether to support your family, to pay for a property back home, or for any other reason, there is now a 1% federal fee on certain international money transfers made from the United States. This is real. This is law. And for immigrants who regularly send remittances home, this is a new cost you need to factor into your budget. Keep your transfer receipts. Keep records of every international transfer you make going forward, because these transactions are now part of your financial profile in the U.S. system. The fourth hidden rule is about timing. Some people hear about these new policies that started in 2025 and 2026, and they think, well, if I just become compliant from now forward, my old mistakes will not be counted against me. That is not how it works. USCIS can review your entire compliance history, not just what happened after the new policies. Old miss.If filings from years ago can and do surface during citizenship adjudication today. The statutory review period for a citizenship application is typically the last 5 years of your life in America. If you missed FBAR filings during any of those years, those gaps are visible. And the fifth hidden rule is the one that changed in court just this January. For a long time, immigrants who missed FBAR filings could argue that they genuinely did not know the rule existed, and that their failure was non-willful. That argument still exists, but a court ruling in January 2026 established that being reckless, meaning having foreign accounts and simply never looking into your reporting obligations, can be treated similarly to knowingly breaking the law when it comes to determining your penalty level. I did not know is becoming a harder argument to make, especially in an era where the government is actively increasing enforcement. And there is one more mistake I absolutely have to mention before we get to the solutions, because this one catches green card holders specifically, and it has serious consequences. Every year, thousands of green card holders accidentally file the wrong tax form. They file Form 1040-NR, that is the non-resident tax form, instead of the regular Form 1040 that residents are supposed to file. Sometimes this happens because they used an accountant who specializes in international taxes and made an error. Sometimes it happens because the person spent part of the year abroad and assumed they were non-resident. But USCIS, under the September 2025 guidance, can now treat filing as a non-resident while holding a green card as a signal that you may have been treating your American residency as temporary, that you did not truly intend to make the United States your permanent home. And if an immigration officer raises that question at your citizenship interview, you are in a position you do not want to be in. The lesson here is simple but crucial. Once you have a green card, you file Form 1040 as a resident every year, even if you spent half the year in your home country, even if your income was mostly from abroad. Your filing status as a resident alien stays locked to your green card status until you formally give it up. This is not negotiable, and getting it wrong can follow you all the way to your citizenship interview. So what do you actually do right now? Let me give you a clear step-by-step plan. The very first thing you need to do is figure out your exact tax residency status for every year you have been in the United States. Not your visa status, your tax residency status. These are different things. An F1 student is typically a non-resident alien for the first 5 years in the country, meaning many of the foreign account rules do not yet apply to them. But an H-1B worker, a green card holder, or someone who has passed what is called the substantial presence test becomes a resident alien for tax purposes, and from that point forward, all of these rules apply. Your visa type and how many days you spent in the USA each year are the two key factors. If you are not sure of your status, a cross-border tax professional can work this out with you quickly. The second step is to go through every financial account you hold outside the United States. Every country, every institution. Write down the highest balance each account reached during every year that you were a U.S. tax resident. Now add them all together. Every account, every country, combined into one total. If that combined peak balance crossed $10,000 during any year, you should have filed an FBAR for that year. The third step, if you determine that your foreign accounts triggered the FBAR requirement, is to file those reports. You do this online at bsafiling.fincen.tres.gov. It is free. It is electronic only. You cannot mail it in. The current deadline for 2025 accounts is April 15th, with an automatic extension available until October 15th. And you do not need to file any separate form to get that extension. The fourth step is to check whether you also need to file Form 8938 with your tax return. This is the FATCA form. It covers specified foreign financial assets above certain thresholds. For single filers, you need to file Form 8938 if your foreign assets exceeded $50,000 at the end of the year or $75,000 at any point during the year. For married couples filing jointly, those thresholds double. This form goes with your regular tax return. It is separate from the FBAR, but covers some of the same ground with different thresholds and different rules. The fifth step, and this is the most important one for anyone who has missed past filings, is to use the IRS streamlined filing compliance procedures if you have gaps in your history. This program was specifically designed for people who missed FBAR filings because they genuinely did not know about the requirement. It allows you to file late FBARs and any missing tax returns while significantly reducing your penalties. In some cases, for people living in the USA who qualify as non-willful, the penalties can be greatly reduced. Getting into this program and completing it before your USCIS interview is powerful evidence of good faith. It tells the officer that you discovered a problem, you took it seriously, and you corrected it voluntarily. That is a very different conversation than being confronted with missed filings during your interview that you never addressed. The sixth and final step before any citizenship interview is to pull your official IRS tax transcripts for the last 5 years. Not copies of your old returns, official transcripts, which you can request for free at irs.gov. Go through them carefully. Look for any years where a return is missing. Look for any inconsistencies. If anything looks wrong, address it with a tax professional before your interview. Do not walk into that USCIS office hoping for the best. Walk in knowing exactly what your tax record looks like, because the officer may know too. I want to leave you with something that I think is really important to hear. America has always required immigrants to follow tax rules. That is not new. What is new in 2025 and 2026 is the connection, the direct, formal, official connection between your tax compliance and your immigration status. These two worlds used to exist in separate lanes. They no longer do. The government is now using your tax history as a window into your character, and character is the foundation of the citizenship process. But here is what I need you to hold on to. The fact that you are watching this video means you care. It means you are trying to understand the system and do things right. And for the vast majority of immigrants who have missed FBAR filings or made tax mistakes, the path forward is not complicated. It is not shameful. It is just a matter of taking action before someone else brings it to your attention. The IRS streamlined program exists because the government itself acknowledges that these rules are complex and that many people miss them without any bad intention. Use that program. Work with a qualified professional, get your records in order, and then walk into your citizenship application knowing that you have done everything right. Please share this video with every immigrant you know in the United States, especially anyone who has accounts in another country, anyone running a small business, anyone who is sending money home regularly, and anyone who is planning to apply for citizenship or already on that journey. The information in this video could genuinely change the outcome of their application. Drop your questions in the comments below. I read every single one, and I will do my best to address them in future videos or directly in the replies. Subscribe to this channel if you want to stay ahead of the rules that affect your financial life as an immigrant or student in the USA and the UK. And remember, this is educational information only. Please always consult a qualified CPA or immigration attorney for your specific situation. Tax laws change, and your individual circumstances matter. The official sources for everything covered in this video are IRS Publication 519, the FBAR filing system at bsafiling.fincen.tres.gov, IRS Form 8938 instructions, and the USCIS Policy Memorandum PM 602-0188. All of these are free, official, and publicly available. You now know what most immigrants do not. Use that knowledge. Protect everything you have built.